Good morning, everyone. I'm Connor Kinsella, a real estate advisor here with Prompton Real Estate Services in Vancouver, British Columbia. My focus is primarily on residential real estate in Vancouver West and Vancouver East. I'm joined today by Katy Mackenzie, an award-winning mortgage professional with TMG The Mortgage Group here in Vancouver. Katy has seen it all in her many years of experience. And put some time aside today out of her busy schedule to chat about this topic a little bit more. Katy, thanks for joining me.
Thank you for having me. It's an honor to be here with you.
So our topic for today's discussion surrounds people buying property in Vancouver and how they can take advantage of the RRSP Home Buyer Plan. I've got a few questions for you that we'll make our way through now. First question is, in a nutshell, what is the Home Buyer Plan?
Yeah, good question. Well, first thing I want to make sure we talk about is that it's not just for first-time home buyers. So this plan allows you to withdraw up to $35,000 to contribute towards the down payment, purchase of a home, or furnishing of a home. So this is for each and every buyer or homeowner on the contract of purchase. So if you're buying as a couple, both of you can actually redeem up to $35,000 each towards that purchase of the property. So you can activate this program if you are a first-time home buyer and or if you have not owned a property in the last 5 full calendar years or lived in a property that was owned by your spouse for that same period of time. Another way too is if you have used the program previously, have repaid the full balance by December 31st of the year previous, and have not owned for 5 years, then again, you can activate this program.
Awesome. I think you answered most of my questions there, Katy. Did we touch on the requirements for the Home Buyer Plan?
Yeah, so again, haven't been a current owner or owned in the last 5 years. It does have to be a property that you intend to live in. So you cannot be activating this program for a rental property. If you choose to jump into the program, purchase the property, and subsequently decide to rent out that property, you do not have to repay the full balance. It continues on its regular repayment schedule, which we can talk about. So you can change the use of the property after closing if you'd like to do that.
Perfect. And with respects to taking advantage of the Home Buyer Plan more than once, did you mention that the full balance had to be paid by December 31st the year previous? And then there was something about 5 years. Can you elaborate on that?
Yes. So you have to have repaid the balance in full by December 31st of the previous calendar year. So if you were purchasing this year, you had to have repaid any balance outstanding by December 31st last year. And you cannot have owned in the last 5 full calendar years. So it sounds a bit confusing, but we can help you out with that. And
Perfect.
Second option, and this is new too, in the event of a marital breakdown or spousal split, there is a provision in there for somebody to be able to access the program, even though they don't fit the standard program qualifications. So also that's client by client specific. So definitely speak to your bank, lender, broker about that if that is a specific scenario for you.
Awesome. And then last question I have for you, what are the advantages to pulling money out of your RRSPs for a down payment versus maybe pulling money, out of your bank or, pulling the money out from maybe a lender or something like that?
Mm-hmm. So I'm a big proponent of this plan. I used it myself to get into my first home. Most people are programmed to believe that an RSP is just for retirement. And yes, that is the idea, growing assets or wealth overall. But if you can move assets underneath an RSP that are tax deferred, so any growth in an RSP is just tax deferred. You still are going to pay income taxes at your highest marginal tax rate at some point as those assets come out. But if you can take them out of your RSP today and basically loan them without interest to yourself to get into a property and have that asset grow tax-free, because again, as per the program, it's your primary residence. And because we currently have no capital gains tax on an appreciation of a primary residence. And I'm not a tax advisor, so please speak to your accountant for all of these pieces, but it moves it from a tax deferred product into a tax-free product. And you're using your own money. So let's say you don't use the program. Now you're borrowing an extra $35,000. You may now trigger additional interest on the mortgage insurance, possibly because you don't have a 20% down payment. So overall, it's a great program to activate because of more effective financial planning, use of funds that you already have.
Awesome. Thank you so much for your time today, Katy. That was very informative. If anybody has any questions, you can definitely reach out to Katy Mackenzie at the Mortgage Group or myself, Connor Kinsella with Prompton Real Estate Services. Katy, thanks again for your time.
Awesome. Thanks for having me. Bye for now.